As Kenya's economy struggles with a debt crisis, its flower growers are tapping new markets in Asia and Eastern European countries to drive growth. Flower sales were a top foreign exchange earner in Kenya alongside tea, tourism and remittances, and brought in about 78 billion shillings in 2010 from 71.6 billion shillings a year before. Growers are encouraged, especially small-scale producers, to produce and export finished products such as bouquets rather than bundles of cut stems to add value. Small-scale farmers such as Peter Kinanjui in Kinangop, central Kenya, are finding a foothold in the flower business by growing wild summer varieties, among others in small open farms.
Varieties which we grow here are very, very selective varieties. Most of the big farms around Naivasha, around the lake, they don't grow. The varieties we grow here don't do well in those big scale farms. Therefore, the retro we produce outside here is always marketable. We have not really felt the pinch of the European crisis because the demand has always been there.
According to 2007 horticulture figures, small-scale farmers' flower growers contributed 8% of the country's flower exports, bringing in around 22 billion shillings. The period leading to Valentine's Day on February 14th is among the farmers' busiest periods of the year. It takes less than 24 hours for a rose to be cut, boxed, shipped and sold at auction in Holland.
Despite the fact that 60% of our production is roses, and 40% comes now from the summer or the field flowers. And you can see that these are mainly produced by the small-scale grower. And so we wanted to show that face of the industry, particularly because it is gaining in terms of its significance, gaining from the perspective that the industry is evolving to not just sending out flowers in a box, but also sending out finished products.
According to Jane Ginge, the Eurozone's crisis has not affected sales. Kenya exported 110,000 tons of flowers last year, down 9.3% from 2010. The East African nation also accounts for more than a third of all flower imports to Western European markets, including London and Amsterdam.
We already have a good reputation because of our product. We've managed to break into the Japanese market very well. We already are commanding 20% of their import market share. We've broken into the Russian market. Last year we sent the biggest trade delegation we have sent anywhere, comprising of more than 40 growers into the Russian market. So we are making good strides into that area.
Despite the fall in volumes, flower export earnings for 2011 are expected to surpass the 30.6 billion shillings earned in 2010, thanks to a favorable exchange rate. Kenya's shilling collapsed last year, losing 25% against the dollar before the central bank hiked rates and triggered a rally in the last quarter of the year. High input costs, soaring lending rates and labour unrest, however, are expected to squeeze profit margins.